Hey everybody, hope you're doing well. Hope you had a great week of trading. Today we're going to cover our weekly Qs, or essentially the NASDAQ-100 for the week of June 14th. Let's jump into it. Well, first, a couple of house cleaning items. Prep to Grow is an AI big data platform. We're actually releasing our new offering called Portfolio, which is essentially we either analyze your investment portfolio and make recommendations for improving. It connects to any investment company out there, and it gives recommendations. We're out for beta. We've been essentially in testing for a little bit, since November. As a comparison, we've actually in our testing have beat the S&P 500 by about 8.4% since November. If you want to sign up and do a beta, just go to the URL put in the description. The second is also put the link into the analysis of our performance the last 7 months. It does have our actual Robinhood statements within there, and everything was done based upon what is typical Prep to Grow subscriber investment amount and how much they would make. So if you're interested, check it out. We'd love to have more folks participate in beta. It's a free beta for the next 2 months. The next is doing a seed round. So if you're interested in becoming an investor or part owner of Prep to Grow, we'd love to have you. You get a lot of perks related to that, and we're doing a crowdfunding round on wefunder. So let's just jump into what happened this week of June 7th. So we were projecting a small bull. Just terminology wise, we're going to move away from flat to bull. We're just going to call it a small bull, meaning it's going to be an up week, but not a terribly hugely up week. So we were predicting a small bull. Thus far at about 10:30 Eastern Standard Time AM. It's up 1.6% for the week. So if our projections of a small bull, not like a 3% or 4%, but it's positive for the week and 1.6%. So we're excited about that. This is the third week of a 4-week bull cycle that we've been projecting. There should be one more week of this before mayhem happens with a pullback. But our projections are up for the last couple of weeks. It's up 1.4% versus last week. This is our own internal growth. So how is the QQQs going to do and grow our week over week? So, year to date, we're expecting 39% growth for this entire year thus far, or in towards the end of the year as well. Analysts are forecasting a 33% growth within the next 12 to 18 months, and that's a 4% increase week over week. So they've really upped their targets, which is great. These are looking great, and we'll get into who's announcing this week, and everybody seems to be an all-time high for growth, which is awesome. So let's talk about next week. Again, we're switching the terminology from flat to bull to just calling it a small bull. Small meaning it's probably less than 2%. A big bull would be greater than 2%. So we're just tweaking our terminology around a little bit. Reasoning, QQQ is, of course, at an all-time high, or I should say all-time growth high. There's a ton of growth within the companies that make up the Q. So they should have a great and stellar 2021. They just came out of their Q2s. And if there was something that was bad on the horizon coming out of a Q2 would really start to impact their Q3 growth numbers, and it didn't. They've accelerated. As soon as Q2 got done, there was an acceleration going into the first week of Q3. So looking like good things will happen for the Qs going to Q3 and hopefully Q4. We are in 3 weeks of projected growth. We believe there's one more week of that cycle. So over the last 4 weeks, the Qs have gone up 4.1 in the last 3 weeks. So that's also a concern. That's an all-time high, but it's really tempered by the fact that the Qs are growing massively. So non-Q growth is dropping. That's a concern. They didn't accelerate into their Q3. So what does that mean? They have a slower start than high tech companies. We'll start to look at the historical data around that kind of thing to assess if that's seasonally a thing that happens. But right now it doesn't look like it is. But we're going to go back a little bit further just to see, do non-Qs, non-high tech companies really accelerate differently than the Q companies, which is natural. Certainly Qs have different performance metrics than non-Qs, and how do they grow and whatnot. But we'll take a look. The last is stimulus is ending. That's a huge concern with inflation rate costs are going up, jobs are expanding, but workers want more money. So there's a challenge with that, especially with companies that have done multiple PPP loans, and are they going to be able to sustain themselves as stimulus ends and that support network kind of goes away? Hopefully that the gov will kind of put some things in place to minimize just the ending of all those things, and to be ready to respond. But right now, it seems like just politically wise, with stimulus ending, they want to end it, and so impact on the market could be a negative. So what we look at for this week, and why the other reason we predict a bull, is that there's certainly way more volume for bull signals than bear signals. So twice the volume to open interest rate for the signals that we're picking up than bear signals. Now I will tell you that, and I mentioned earlier, that this is going to change. So if we look at what's going to happen over the next 30 days out, when we make, and for background, if we make a prediction, let's say for the week of May 2nd, the assumption is going to hit the week of June 2nd. And so when we look at this June bull, it's about a 3 to 4 week period that we look at for a bull. So it's going to end roughly June 16th or this week, which is going into June 14th. And then we'll start to see a decline, which will be kind of a flat period coming into the second half of June. So June 21st, June 28th. And then you'll start to see the flip. So we fully expect the week of July to be a bear. And to some extent that's seasonal. August is typically where the stock market pulls back. Everybody's on vacation, much slower. So we do definitely see in the signals a July bear. So if you're anything long, just think about how you're going to play that and what you should do to mitigate that and take some protective measures in place. And that's our recommendation. Again, Prep to Grow is an AI big data platform. We talk about what is generated out of that. It's our recommendations. We are not a financial advisor. So let's jump into who's announcing this week. Well, let's talk about last week. So Marvell. So our prediction, Marvell is going to crush it. And they crushed it. They had a great week. They were up when they announced, I think like close to 7% after hours. So they crushed it. They did what our expectations were. For the week of June, there's really one Q announcing, which is Adobe. We'll talk about Oracle and Jabil, and we'll talk about one more. But really only 1.9% of the total Qs are announcing this week, so there shouldn't be any massive fluctuations. Just in addition, when we talk about companies for the week, we're going to start to add on who has the most unusual option activity for, Friday of every week. And so, we'll talk about that company and give you a breakdown of what we think about it. So let's just jump into the companies themselves and the predictions. So this is Prep to Grow. If you are a subscriber, it's pretty easy to find where you look at quarterly earnings announcements. But for those that aren't aware, just type in QQQ if you want to see everybody that's part of the QQQ ETF. It'll do a search and return everything. Looks like things are running a little bit low today. There you go. Or if you look at, like, say, Jets, I don't know if we have any recommendations for the last couple days around Jets, but if you type in Jets, you should see some return around that. Okay. But if you want to find folks that are announcing more sooner for a specific ETF, you just go to the drop down, select the ETF you want, and say, show me who's announcing the next 2 weeks, hit apply, and you'll see them. So Xilinx, Micron, tech companies announcing. If you like what you see, just hit the save, and then you can do a save screen on that. Now let's jump into the recommendations for those companies. Honestly, with our 30-day projections for really a pretty big pullback, or what we expect, at least what looks like probably a 3 to 5% pullback in July, we're making a lot of put projections, so keep that with a grain of salt. So let's talk about Adobe first. Let's just dig into it. So Adobe is interesting. So they have not a ton of unusual option activity. For one, the September 17th option expiration and the 10/15 option expiration. So, 0.71, 0.72 is not really unusual option activity, but is some unusual option activity. What are they announcing? They're announcing on the 17th of June. If we look at the price predictions, we don't really think it's going to crash the full amount of the price. But when we don't have a prediction on somebody, typically the numbers don't look as good. So this is actually not a prediction. This is when we look at Prep to Grow and it has something like this in here, it means we're not predicting it. We didn't make a prediction on it. It was just flagged up an unusual option activity. Usually if you look at unusual option activity, it's greater than 1. So that's what you want to look at. So this had the highest unusual activity for Adobe, which is nothing. I mean, it's 120 volume versus 170 open interest. And again, this is for September 17, 2021 option. The earnings data is on 6/17. Some technicals around this. The current price is at 537. So we don't update this if we're not making a prediction on this. So maybe we won't show these next time. But they're way up. They're super up. Adobe is a great company. I love Adobe quite a bit. They're announcing their Q2. We've been tracking since 2013. They're based in downtown San Jose, California, near my alma mater. They're a good company. I know a lot of people that have been there for a while. Great culture. Those folks are very happy there. They really focus on the creative side of the business. So marketing, user experience, those sorts of things, graphic design. Also, you can thank Adobe for the shift to paying monthly subscriptions for software. They're the first ones that really pioneered it. I'm not sure if it's better for the consumer, but certainly much better for companies. Excuse me. Background, Adobe's at an all-time high. Their growth is about 2x in the last 6 months, and so their growth is crushing it. With their stock a bit down from what our target is, roughly about 10%, they may be a good time to buy. But we think the only caveats that our items have kicked out is that there's just general macro caveats that are happening. These folks are more consumer side. They're not like hardcore business side, right? They're digital media marketing. These are the first things that get cut if there's any kind of macro events that forces companies to do slowdowns. So there is some inflation rates and that kind of stuff, but no real macro that would really, really make an impact. But that's the only caveat the algorithms have kicked out. It's just the inflation rates, and maybe that may cause an impact. But they should crush their announcement. We expect good things from them. They really should have a great quarter. So let's go back to the other guys. Next, let's talk about Oracle. Quite a bit of unusual option activity here from May 20th. That's the most recent we've seen that. They're announcing on 6/14. We don't have too great of a success rate with them. This is not a Prep to Grow recommendation. If this would be more of an unusual option momentum trade. Our success rate on the put side is not very good. Our success rate on the call side is very good. So it's greater than 95%. So if a call came out, we would recommend it. But again, the algorithms are predicting at the 30 days that there's going to be a pullback. So their price is currently at 83. So Oracle is announcing their Q4 or the end of their fiscal years. We've been tracking them for a very long time, since 2009. They are now based in Austin. They just moved out of the Silicon Valley. For disclosure, I've spent many, many years at Oracle. Kind of really grew up there as a product person. From a building they built enterprise software. They, at one point in time, was really a career stop for most folks within the enterprise space and wanted to make a product career out of that. So not so much anymore, but general-wise, it's not a bad company. Oracle is in a weird place, though, from a trading and an investment recommendation perspective. They have grown their entire fiscal year, consistent growth. Now, the challenge is they went into that right before their fiscal started. Just like everybody else, they've done a massive pullback. And they are at an all-time high of corporate growth. And so they're spending a lot of money to grow. And that's what they should be doing, especially with them getting really knocked around by other enterprise software, cloud software, infrastructure players, that kind of stuff. They really haven't done a good job of competing in those spaces and really viewed as the third or fourth or more in most of the markets that they play in. And so that's a concern for Oracle in terms of their growth rates. Now, with their high corporate growth, they're spending a lot of money, and so their earnings per share may take a hit. going into the end of their fiscal year. So just note that Oracle does typically hit most of their numbers, but I think with all this growth and the competitive pressures that they're facing, that they are going to miss expectations. And so they're at a weird place. They're super high. So our prediction is that the algorithms are saying it's a pullback, about 13%. But again, this is not enough for anybody to make a play off of. Now, this is unusual option activity and momentum. So if you want to play that, then that's your trading style. But from a prep-to-grow strategy, we would not place a bet on these guys. Also, generally, as I always state, earnings is incredibly risky. Nobody should play earnings. It's more risky than taking a look at term options. So earnings are very risky. So let's talk about Jabil. Jabil's announcing their Q3 on June 17th. Algorithms are predicting a pullback. Again, just like Oracle, we don't have great success with them on puts. We're much better at calls with them. Not a lot of usual option activity at all on Jabil. They're generally viewed as a solid company. The analysts really like them. They are announcing their Q3, and we've been tracking them since 2013. They're actually in Florida. They're not in Silicon Valley, which is a surprise. And they specialize in circuit design, so systems on the chips, ASICs, so on and so forth, and they do the manufacturing of them. Again, they're a very well-respected company by the analysts. Jabil is coming at an all-time high, so this is why we also would not put a put on this, but a call-wise potential. But they're going to a bit of a decline as they exit their Q3 going to Q4. So the challenge is that we're projecting their forward-looking outlook may be at risk. And it's not a small readjustment as they exited Q3. It was about a 5% adjustment, which is in the scheme of things, a pretty big adjustment. So the album's kicking out with a sudden pullback immediately post Q3. They may pull back. They may have an outlook that's not as positive and rosy, which is surprising since this is my connector chip business. So, but then again, it could just be that they're trying to lower costs. So again, Jabil, great company, market loves them. Maybe a pullback just because of the decline bump immediately following Q3. But on their stock side, I believe they're at all-time high. And so with this quick decline, it may be ripe for a short pullback. If you look at the technicals, the 5-day, 20-day is right around where it's at today. Their 52-week range is 58. And so they've missed it all. It'll be impactful on them. So let's jump back into the last one, which is the massive unusual option activity for Alexion. So we're not great at them. This is a pure momentum play. We wouldn't buy them. But we're going to start just talking about some massive unusual option activity for companies. So their volume to open interest rate was 19.23. So somebody bought 2,500 shares, a volume out of what is usually a 130 open interest. For the June 20th, 2021 expiration date, had a 160 strike price. That's insane. That's massively, it's a massive volume. But if we look at their technicals, they're at high. They're out their 52-week range from a current price versus their 5-day, 20-day, 200-day. They're in a massive high. So either somebody got some inside information, or somebody is making a big hedge that Alexion, which is a pharma company, may have an announcement that's going to go sideways on them. So unusual option activity play potentially with this kind of volume. Again, options incredibly risky. Alexion doesn't typically have a lot of option volume, so be very cautious around momentum plays around something like this. So let's jump into the rest of the week. Those are the ones we're going to cover. Again, only 3 companies coming out this week: Adobe, Oracle, Jabil. Adobe should crush it. Oracle may miss earnings per share, announcing their end of the year. Jabil had a short pullback, or had a pullback at the end of their Q3 going into Q4. So is that a bad sign? Potentially. If we look at post this, again, earnings season is light. We may have more coming out next week. Micron, as we saw, is announcing, which is a great one for chip side. But we're entering the last week of our bull cycle, we believe. And then we're going to enter into a flat week or two and then go straight into a pullback of a bear in beginning to mid-July. Our signals are really strong on that, and most of our recommendations for the next few days are strongly puts. And it's shifted quite dramatically. So if you have any long-term stuff on the calls or the stock side, our recommendation, again, we're not financial advisors, is to use some caution. But I hope this helps. Hope you have a great week of trading. And if you have any questions for us, you can always reach out to us at contact@prep2grow. If not, have a great week of trading and take care.